Hi everyone and welcome to today's morning report on Thursday the 17th of December with me, Rich Perry, market analyst at Tech Markets. We're looking at the markets post-Fed and the markets have reacted significantly to the Fed announcement of a rate hike, 25 basis points to the upside. But Janet Yellen tried to sort of paint a rather dovish picture really of a gradual path of heightening or hiking. Although it's interesting because the dot plots, in my opinion, don't necessarily reflect that. But I'm on Tip TV later on, and I'm going to sort of expand on that a bit more. But I'm a little bit surprised that the dollar has been so strong, and I'm not entirely convinced that it's going to necessarily continue without a bit of a snapback at some stage. But certainly early on today, we've got dollar strength pretty much through the board against all the forex majors. Equity markets are also very strong, but first of all, the dollar. That strong move to the upside, obviously on the back of the FOMC. In the trade-weighted dollar, what we have seen is obviously Treasury yields on the 2-year basis pushing above 1%. That is a very strong move. Interesting though that the 10-year is pulling back, pairing some of those gains on the yield. Is that sort of reflective of a bit of a more dovish sort of Fed move than potentially that the dollar is factoring in at the moment? Could well be, but markets in terms of volatility, or equity markets, are certainly benefiting. Volatility strongly lower. Equity markets soaring in Europe as we speak. FTSE up 1.5%, the DAX up 2.5%, and the CAC 2.4%. So strong moves that we're seeing across the board today. Now we've got a little bit of economic data, not a huge amount to distract us from this Fed. Today we've got the UK retail sales at 9:30. That's expected on the adjusted ex-fuel basis to come down actually to 2.3%, which would actually be the lowest since 2013. Wow, that would be the lowest since then. So these retail sales in the UK just falling away, aren't they? That certainly is a trend of falling retail sales. So if that continues to be the case, now that sort of argues against a UK rate hike, doesn't it? But anyway, we'll see how that turns out. And then at 1:30 we've got the weekly jobless claims at 275,000. Doesn't do a great deal these days, the weekly jobless claims, but still that is the expectation. Perhaps more interesting is the Philly Fed Business Index at 1:30 as well. That's expected to dip back slightly to 1.5. Now the Philly Fed is probably the more positive of all the regional Fed surveys, and that needs to stay positive, I think, pretty much all across the board. All the others are negative, so Philly Fed would ideally be staying positive, otherwise we could be getting a little bit more concerned about the regional Fed surveys once again. That takes me to my chart today, which is the Euro Yen. Now I've sort of looked at this because Euro Yen is in this downtrend channel, has been for the last few months, and it's been had that sharp move on the ECB, but it's been drifting away really ever since then, and the momentum indicators are just reflecting that drift really. The RSI falling back, the stochastics just slightly just settled a little bit in the last couple of days, but still drifting on the negative basis. And what I'm sort of looking at is this key support band 133. That is coming under increasing pressure on a daily basis. This rate is being tested. Yesterday's move sort of topped out at 33.80 and it's back towards 33 figure as we speak. My expectation is, well, my worry is that it's sort of putting pressure to the downside. 32.40 is that key reaction low that we've got so far, but if you started to see a breach of that 32.40 level, also you'd be looking out for a whole trading session below the 33 figure level. That would sort of suggest that we're breaking down again, and if you saw a move below that 32.40 level, you'd reopen the sort of support band pivot level, minor pivot level around 31 figure, but obviously these reaction lows around 29.60 could come back into play again. As you start to get this downtrend channel continuing to pull the rate lower. The intraday hourly chart doesn't show you a great deal more than what we've got already, but it does potentially show you that rallies are being used as a chance to sell. This RSI anywhere around that sort of 60 area, 62, 63 seems to be a selling opportunity. a bit more neutral in the last couple of days, but certainly the general rule over the last sort of couple of weeks is really sort of corrective, with sort of moves back towards 30 on the hourly RSI. Hourly MACD lines, similar sort of story really, sort of slightly near term, sort of consolidating, but again I think we are putting pressure potentially back on those lows, and certainly if you fail to sort of break back above that 33.80 level, I think that is putting pressure to the downside. You've got the downtrend coming in today around 34 figure, so that's going to continue to fall away. So it certainly looks as though there's a bit of a squeeze on the outlook. Anyway, so I wish you good luck in your trading in Euro Yen and across all the markets today post Fed, and I will speak to you later. Thank you.